All right, welcome to Coffee with Marcus and Mark. And we hope that we are live because Friday we tried to go live and somehow it didn't work. Although Friday was probably one of our best shows ever, right, Mark?
It was. It was the secret show, but
The
uh,
secret one.
you missed
Anyhow,
it.
so just briefly, in this show, we are going to talk to you about what's happening in the markets and how we are trading this. So today is Monday, December 12th, and this week promises to be an eventful one because investors are waiting for the CPI inflation data that's being released tomorrow. And then we have the Fed meeting on Wednesday. So will the Fed pivot from an aggressively rising rates and send markets higher, or will the markets crash this week? But most importantly, how are we trading the markets and what do we do with our position that we got assigned on Friday? We'll talk about all this and more. By the way, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark Hodge. And we are real traders who trade live accounts. So therefore, we got a lot of trading experience and we are showing you how we trade these crazy markets. So trust me, we know our stuff and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And it seems that we are live. So we can continue and talk about the markets here. S&P 500. I mean, Mark, last week, one of the worst weeks since September.
Yeah, it was a rough week, Marcus, and pulling back a little bit. Uh, you know, we have had a decent move higher off of the lows in October, but it does look like right now we're in this range, capped by the big move that we had on Wednesday 2 weeks ago now, and then some support right there. So it looks like traders are really waiting for the next piece of data or information to decide whether or not we should be selling or buying this market.
Yeah, and this where this week, especially tomorrow and on Wednesday, will set the tone, I believe, for the remainder of the week. If you look at
Sure.
the economic calendar, last week we had the PPI data that came in higher than expected, which is not good. And now the big one tomorrow is the CPI data, and this comes one day ahead of the Fed meeting. And I expect a strong reaction of the markets to the CPI data tomorrow.
I did too, Marcus, and just because I think that PPI data and CPI data can be viewed together going into the Fed meeting, and that could foreshadow what the Fed will do, right? Because PPI data came in hotter than expected, and if CPI data does the same, then the Fed's going to raise by 50 basis point. That's what's factored in, but they're going to have some strong wording, I believe, saying, hey, we're not done. We're not out of the woods. Inflation is hot. So I think CPI data is going to be a big driver this week.
Right. I'm honestly still surprised that there's a 25% probabilities factor into the futures that there is a 75% basis hike. I don't see that. I don't see that.
I, I'm with you. I hate to say it, but I don't think that the Fed has the guts to go 75 basis point. And it could be that it's a rational decision not to because it's past data, right? No matter what, you're looking forward looking and yeah, PPI data was a shock, but it's past data. Tomorrow's report's based on November. And so the Fed needs to be thinking ahead what's going to happen. And that's why I don't think that a 75 basis points is realistic.
Right. And then, I mean, most importantly, is what will happen for the remainder of 2023 or for 2023? Because this will be the last meeting of the year, and the next one is not until February. Right now, traders are factoring in a 50% probability of another 0.5% hike, and then that the Fed will be pausing. And I think this is exactly what you said. Tomorrow, this is going to change. I think that the
Yeah,
50 basis points are also pretty much guaranteed. And of course, we could be wrong, but this, what will happen next year? That's
exactly.
important. And this is where I expect a strong reaction. We just talked about it with our mastermind members. So I expect actually tomorrow a reaction of at least a percent and a half right after CPI data is released, both to the upside or the downside. And then for the remainder of the day, I believe the S&P at least 1.5 to 2% movement, and the Nasdaq probably 2 to 3% move tomorrow.
I wouldn't be betting a box of steaks against that.
Yeah. And it's really interesting because we have already seen for the last few days that markets have been waiting. And today we really need to zoom in. This little blip there, that is actually the market today. And if we switch to a 5-minute chart, we just see it's a super, super narrow range. We're talking about a range in the S&P of 10 points. And we're trading off a level of around 4,000. So that is nothing. We're just diddling, slightly drifting higher right now, it seems, but this can change very quickly because tomorrow is definitely the big day.
Exactly, exactly. VIX, VIX telling us a story too.
That is super interesting because the VIX, the fear index, this morning jumping higher, 7% higher, which just shows how much uncertainty there is. Because honestly, tomorrow is the last big piece of data that we have for the year. I mean, what is the Fed looking at? The unemployment report, that's coming out in January. The next CPI, PPI data, and even the PCE index, I think, is coming out either towards the end of the year, where there's nothing to do, or early in January. So, yeah.
Yeah, no, this week will set the tone, and last big data week for the month and the year.
Yeah. So this is where we'll see if we go above 4,200, which is my bet. And I decided that if I win the bet, I want tomahawk steaks.
Oh, okay. We
Raising
can
the
do
stakes
that.
here.
And
Raising the.
I'm just checking here. So to get to 4,200, you're about 5.5% away.
That is not out of the possibility. I mean, we could actually see a big chunk of this move this week, and then the Santa Claus rally could kick in and drag us up there.
Yeah, I mean, we had a 5% month in November and October, also July, but the odds are not in your favor, Marcus. I'm just gonna have to say.
You'll see, because this is where we go right above. We will slice through the 200-day moving average. It will act as right now it's resistance. It will then act as support, and you'll see.
All
Okay.
right.
Anyhow, let's talk about our existing positions, and one of them super interesting because CTRA. Let's talk about this one because CTRA. We both got a sign on Friday. Let me zoom out here a little bit so that we see it. CTRA, we sold the 26 put that expired on Friday, and on Friday we were trading well below 26. So we both got assigned the shares, and we're right now trading at $25. So, what's happening, Mark? What do we do here?
Yeah, and I mean, this is where I think that CTRA has some nice support. And even if you look a little further back in July, it looks like there's some nice support around 25 as well. So the drop down to 25, that's not a concern to me. We were able to collect some credit, some decent premium on the put side. This one has a nice dividend. In November, it paid a 68-cent dividend. So that's great. And right now, I'm keeping an eye on selling calls at the 26 strike.
Right. So that's the next step with the wheel. First, we're selling puts, and then we're trying to sell calls. And right now, if we look at CTRA and zooming in a little bit, so we want to sell calls at our assigned price, which is at 26. And right now, it's 15 over 20. So even if we would get only 15 cents, that's 42% annualized.
Yeah, that's enough for my plan. And 15 cents, I think that's decent. You do that for a couple of weeks, uh, that's a nice credit, and it'd be nice to see CTRA drift up towards 26. Now, I'd be looking more for 20, 25 cents just because I think it's possible. CTRA right now flirting with that 25 level, and I think we could move a little bit more today. 20 cents, 25 cents could be on the table.
Yeah, and that's what I'm looking for. I mean, the 20 cents, if we plug them in here, would actually give us 55%. I mean, this would be really nice. So I'm looking towards 20 cents here, even though 15 cents would be just fine based on our plans.
Yeah.
All right. Now, well, before we come to NVIDIA, let's talk about Play. So Play, that's another trade that we entered last week. And here we have the 32 puts expiring December 16th. You have the 31 puts. And I mean, right now, play is just moving higher. So these could be puts that expire worthless. And that's what we'll have with the wheel. I mean, we have some puts that we are selling that expire worthless, and some we're getting assigned where we can then sell calls. So
Yep.
this, we'll see what happens, but we might be able to close this at 90% of max profits.
Yeah, right now I'm at 73% max profit. Bids fit 5 cents, offers 10, and I have an order in to close at 3 cents.
Yeah. All right. Then we have Google, and the Google is just doing, I mean, the Google, we just talked about it. It's weird, right? I mean, why is Google falling right now? I mean, we're not concerned about this. I got assigned at 108. So if you're looking at, what is it right now? $92, 108. So that's down, what, like 15%, something like this. So not too concerned, but really interesting that Google, I mean, can catch a break.
Yeah, it is interesting because I just pulled up the correlations, and for the year it has a 84% or 0.84 correlation with the S&P. But recently it sure seems to do a little bit of the opposite, right? Where
So
S&P is up, Google's down, Google's up, S&P's down. So interesting moves.
we shall see. Okay, so nothing to do for us right there. So, but this could move really tomorrow with the CPI data if this is better than expected, and Fed Chair Powell on Wednesday says the right things. I mean, Google could rally. We'll see. But Nvidia, I know that you did a quick video after we had this snafu on Friday. Basically, because we discussed three possibilities. What should I do with Nvidia? And so the big question is, what did I do with Nvidia? And let's go back to Friday in the morning. If you're looking at a 5-minute chart of Nvidia, let me just hop over there. So we saw on Friday, as we were talking and you were doing the show, Nvidia was just right around 175, right around here. And this is where I had possibilities of either not doing anything, this was door one, or number two, I could roll into next week's 175. I could roll up to the 180 or roll down to the 170. And this is what we discussed last week. And then we got a lot of feedback in the comments of what should I do. So the big reveal, here is what I did.
Wait. Before you do that, it seemed like the number one pick with the group or viewers was to roll the 175 for a nice credit.
Roll
And
the 175.
that was what I would have done. That was my pick as well. So for those of you who thought that was the best option, I agree. So
Yeah,
Marcus, what'd you do?
nothing. Because here's why. Nvidia kept falling into the close, as we see, closed on Friday at around 170. So therefore, the calls expired worthless. Now, knowing that last week was one of the worst weeks since September, I expected today the markets to bounce a little bit back, because that's what we often see when we have an oversold scenario. And this is where I thought, okay, I'll let the expire worthless, and then I'll be able to sell some more calls today. And this is what Nvidia looks today. So right now, my plan for Nvidia for today is, after I went with option one last week, I'm going with the audience's favorite of selling the 175. And right now I have an order in to sell this for $5. Now, right now, this is where Nvidia needs to move a little bit higher, because right now it's 420 by 430. So I could very easily get right now $4.25. I want to see what Nvidia does. It has been pushing higher. It's diddling around here. So right now, this is where I said, I want to hold out for $5. I will be okay lowering this a little bit later today to potentially $4.50. And here's why. I mean, tomorrow is the big day, because I mean, this $4.50 would give me almost $5,000 in premium. I'm really liking that. I'm really liking that.
Yeah, that looks nice, and I think that the 175 right now is a great option. There's some nice premium as it stands, but going for $5, that's respectable. I like that.
Yeah. So we'll see. And then again, tomorrow with a bad CPI report, Nvidia could plummet and I might be able to buy back the calls. And if it rallies, then I will get called away on Friday, which is actually not bad because next week I'll be traveling. So I'll be with the kids in Miami for a sailing regatta. And so therefore, I'm okay if I'm getting called away. Well, if not, then of course I'll manage the position next week. But so that is my plan with Nvidia right now.
I like it.
All right. So again, looking at the overall markets and a 5-minute chart here, seems that the S&P wants to push a little bit higher, the Nasdaq just diddling around, and we are very, very, very clearly in a wait and see holding pattern here. So for us today, no new positions because if tomorrow the CPI data comes out much worse than expected, we might have plenty of opportunities tomorrow, and that's what we're looking for. So tomorrow and on Wednesday, the big day. Okay. All right. Now, with that said, if you would like to learn more about the wheel strategy and how we are trading it, I'll link to a video here. And please make sure to tune in tomorrow because when we go live tomorrow, the CPI report will be out of the way. So hit the notification bell, click on like, and then we'll see you tomorrow.
Happy trading, everybody.